In real estate, tension coils. Housing supply is tight, mortgage rates still high, but buyers hesitate. In sunlit suburbs and Rust Belt row homes, real families weigh whether to lock in a loan now or wait. Developers in Texas and the Sun Belt feel the tremors. Land prices rise, permits slow, and spec builders pause. Meanwhile, in older industrial cities, vacancy rates whisper of overhang and stagnation. The housing narrative is half dream, half dread. But technology pulses onward, a shimmering undercurrent of possibility. Startups in AI, quantum computing, advanced materials hum with purpose in Silicon Valley, Boston, Austin, and remote corners alike. Investors pour capital like water into foundations, chasing breakthroughs that could rewire every sector. The question hangs in the air: if AI fails to deliver, what then will carry this economy? Meanwhile, chip factories in the smoke rises over the New York skyline as the ticker tape flickers red and green, a ballet of fear and hope. In Washington, the corridors echo with hushed urgency, corridors half lit by the glow of emergency lamps. Somewhere between a bank trading floor and a small kitchen table, the country holds its breath. The day dawned in Wall Street with a deep exhale. Stocks opening under tension, indices wobbling like a tightrope walker in wind. Optimism around artificial intelligence investments fuels rallies in big tech, but every rally feels shadowed by an invisible tremor. Tariff threats against China swirl overhead, making foreign supply chains jitter. The specter of retaliatory controls haunts chip makers and rare earth-reliant manufacturers. The S&P dips and climbs like a heartbeat under duress, and each tick counts as a question. Can the markets outrun politics? Inflation remains the specter in every boardroom meeting, a slow ghost creeping through grocery aisles and fuel pumps. Consumer prices, especially for rent, energy, and food, press against households already stretched thin. Core inflation teases the threshold of worry, resisting the narrative of easing. The central bank stares at it in dim conference rooms. Calculators open, watching for cracks. Will they dare to cut rates? Or will they choke growth in pursuit of control? The West hum with metal and heat, as clean energy firms in the South weld new battery lines. The energy sector itself bucks and strains under record output, oversupply threatening to hollow prices even as workers are laid off. Labor moves like a river in flood and drought at once. In gig cities, engineers, nurses, teachers, delivery drivers, each carries a story of uncertainty. Federal workers, thousands of them, have been furloughed or laid off as the government shutdown drags on. Public health agencies, environmental offices, regulatory bodies shrink. In parallel, private employers in logistics, manufacturing, healthcare compete fiercely for talent, offering flexible hours, signing bonuses, retraining programs. But the river is uneven. In some towns, townspeople struggle to get full hours. In others, talent can't be found. This country balances on the ribbon between productivity and fragmentation. Which side will it fall? What is the story of a nation that must innovate even as the foundations quake? Across the Atlantic, Europe watches nervously as U.S. interest rate decisions echo through bond markets. If America slips, the ripple hits the Eurozone, dragging yields upward, testing budgets in Italy, Portugal, and Greece. In London trading rooms, voices murmur. How far will dollar strength clamp European exports? The U.S. credit risk repricing sends tremors through Maastricht corridors and German Bund auctions. The world's investors shift, recalibrate in the shadow of America. Meanwhile, in Shanghai, Chinese diplomats and industrial planners sense opportunity and threat. Tariff threats drive them to reorient supply chains towards Southeast Asia, while their state-backed chip firms redouble efforts to fill any void. The U.S.-China tension becomes a catalyst. Across East Asia, factories hum, contracts realign, alliances flex. In Seoul and Taipei, executives watch every move of Washington with wary fascination. The flows of capital and tech are rewiring before their eyes. Back in Washington, lawmakers posture, negotiate, threaten shutdown extensions, even as the economy stutters. Foreign delegations press for clarity, trade partners agonize over unpredictability. The U.S. posture reverberates outward. In Latin America, debt markets wobble at U.S. interest posture. In Africa, Chinese-backed projects face recalibration. In Middle Eastern oil producers, reduced U.S. demand or pricing pressures send tremors. Every policy shift here becomes a shift elsewhere. In emerging markets, the storms gather. Nations reliant on US dollar flows see debt service strains. Currency devaluations, capital flight, inflation spikes, these are the responses to America's internal tremors. As global yields rise, developing nations must pay more to borrow, slowing infrastructure projects, delaying energy transitions. The US may be the engine, but the jolt is felt in Dakar, Lima, Jakarta in quiet desperation. And yet across the Pacific, in India, Vietnam, Indonesia, new investments flow in companies hedging risks in America. They build factories, design software, absorb some of the labor strain. American policy, American capital, American signals ripple outward, forging alliances, breaking ones. Who shapes tomorrow's supply chains? The answer lies in the long corridors of power stretching across oceans. In a modest apartment in Detroit, a nurse named Marisol wakes before dawn. She pours coffee, the aroma heavy, warm, a small comfort. Her hospital wing is understaffed. With inflation biting into her rent, her overtime hours have become a lifeline. She scrolls news of layoffs in federal health agencies and wonders if she is next. In Houston's refineries, an engineer named Javier feels the machinery vibrate beneath his feet. He's seen colleagues laid off as oil prices choke expansion. He smells sulfur in the air, hears valves hiss, feels sweat on his brow. Every day he drives home to a suburban street where houses feel too large for the income he brings in. He dreams of shifting to clean energy, but fears his skill may be obsolete. In Cincinnati, Maria runs a small AI-powered logistics startup from a converted garage. Her team of coders, designers, data scientists race against time, pinging servers, rewriting models, chasing capital. She has 30 days to deliver a prototype or lose her funding. She sacrifices sleep, eats cold pizza, watches investors' calls in jittery silence. Her dreams feel like all or nothing. In coal country in West Virginia, John and his brother drive heavy trucks at dawn across narrow roads.
The mines are quieter now, but they still haul.
The wind smells of soot and earth. Because of energy cuts and reduced demand, their shifts shrink. They stand in the yard under steel frames and talk about sending their kids to tech schools, just in case. The old pride and blue-collar grit warps into anxiety. In rural Iowa, a teacher named Linda checks her phone at midnight. She sees new policies proposed in Washington, funding cut for education, stimulus paused. Her classroom supplies run thin. Her students come in hungry or anxious. She wonders if the government that furloughed thousands cares whether her kids learn fractions and history. She breathes, listens to the wind in cornfields, tries to find faith in tomorrow. In Phoenix, an EV battery plant hums with robots and workers. A young line technician, Darnell, wipes sweat from his brow under LED lights. He assembles modules, plugs in cells, tests voltage. He feels the current hum, sees the metal plates glint. He believes this is the future, and yet worries that if public incentives are cut, his shift may go dark. He holds a photo of his daughter who studies robotics in college, as though her future depends on his. In a small southwestern border town, a migrant worker named Rosa picks produce before sunrise. She drives through desert dust, blistered by sunlight, carrying crates of tomatoes destined for supermarkets. She hears talk of tariffs, trade wars, shuttered agencies. She wonders whether her earnings will suffice, whether supply lines break, whether demand falters. She tastes dust and sweat in her throat and prays that the world keeps spinning. Tomorrow begins as a fragile seed. The markets may rediscover footing if inflation cools and trade tensions ease. A rate cut may breathe life into investment, allowing risk to unfurl again in technology, in factories, in infrastructure. But the path is narrow. Too loose and inflation reignites. Too tight and growth withers. Balance must be found. Policy decisions will matter. Stimulus programs, clean energy incentives, AI export frameworks, trade agreements. If Washington reopens, if lawmakers compromise, the signals can ripple outward, restoring confidence. Yet if the gridlock deepens, the fractures will widen. The future demands vision even in crisis. Across towns, people will move, shift, retrain their skills. In Midwest factories and southern farms, innovation and grit will persist. The U.S. may feel tension today, but resilience is stitched into its soil. The question is whether purpose can match pain, whether investment can meet imagination. In the quiet hours before dawn, the country holds both a fragile balance and a beating promise. The markets pulse, the people breathe, The economy becomes narrative, and somewhere between the market's pulse and the human heartbeat, tomorrow quietly begins.